With presence in 29 African countries, 75 innovative risk solutions, over 100 years of experience, it all adds up to being the leading specialist insurer in Africa.
Good day and welcome to the second installment of our new series, The Role of Insurance in the Economy. I'm Fifi Peters. Today's episode explores corporate property and its associated risks. Whether it's surviving the effects of the pandemic, political riots, floods, high inflation, or the energy crisis, insurers and businesses alike are exposed to high risk. So how do organizations stay afloat amid mounting pressures in the macro environment? Joining us to share some insights in today's discussion is Emerald South Africa CEO Carla Jordan. Carla, thanks so much for your time. Perhaps let's just start off there in terms of what is happening in the economy, both locally and globally, and what has happened in the recent while. How has all of that impacted the insurance industry?
I think the insurance industry in South Africa and globally has been quite widely affected by all the cat events worldwide over the last few years, and certainly an increased amount of what they call secondary peril events in the South African environment too, which is the floods, the riots, and of course COVID back in 2020. So a combination of those has affected the cat reinsurers, particularly the treaty reinsurers too, but particularly the cat reinsurers. Of course, they've also had the Russia-Ukraine war and a few other hurricanes and events coming out of the US. So all of that, I think, combined has created a very challenging reinsurance market at a global perspective, but particularly at a South Africa perspective, where we've certainly given the reinsurers a bit of a run for their money, I guess, over the last 3 years of catastrophe events, where South Africa was never really viewed as a cat zone. Historically, and of course that all changed in the wake of COVID riots and floods in the space of 3 years.
It's essentially been a polycrisis, as some have been describing it, just given everything that has been going on at one go, which I'm sure has, as you said, it has given the industry, a bit of a headache or perhaps a lot of sleepless nights. But how has what has happened in the recent while in all these crises, how has it impacted the appetite for reinsurance risk?
So from a reinsurer level, I would say, South Africa definitely not flavour of the month in a reinsurance space. We saw very hardened rates coming into the 1/1 treaty renewal season. So increased cost of reinsurance across the board, more restrictive terms and conditions perhaps as well on the back of increased load shedding and the risk that comes with that. And introducing things like flood deductibles and flood cover to try and reduce the risk around these sort of secondary peril events, cat events that we've been experiencing over the last few years.
All right. Your business does quite a lot of business in the rest of the continent also. And as you started out describing as South Africa as not being flavour of the month right now, in terms of how insurers are looking at it, how are you looking at the rest of the continent? And perhaps how does the risk there compare to what you're facing here at home?
So we have been doing business in the rest of Africa for almost 20 years now. So we have a lot of experience throughout the rest of Africa. I think we really gained traction when Sanlam purchased Saham, and that gave us a lot of presence in the ground in the rest of Africa. Our rest of Africa book is about 25% of our total book now, which gives us a bit of diversification out of South Africa, which did help us on the back of the cat events, because we weren't as exposed in the South African environment as perhaps some of our competitors were. But doing business in the rest of Africa is different. There's different legislation, regulations on the ground in each territory. You have different in-country retentions that may need to happen as well. So you really need to be on top of what's happening in all the different territories. And I've always said that for the rest of Africa, you cannot have a one-size-fits-all approach. Africa is 54 countries, and each of those countries has its own nuances, and you have to and different relationships that you have to build along the way as well. Very much still a relationship-driven environment outside of South Africa, and so it does involve a lot of travel and really building those relationships on the ground. And that's where, as I say, the Sanlam partnership with Saham really helped us with, because now we have the cedant on the ground in 29 territories across Africa.
Sure, and it's complex, right? As you mentioned, in terms of those nuances, there's a whole host of different cultures and different languages and just a different way of doing things. But in terms of the complexity, does that add to the cost of insuring for risk in the rest of the continent?
So the rest of the continent is perhaps a little bit different, and the business that we do in the rest of the continent is perhaps a little bit different because we do a lot of Pan-African programs and multi-territorial programs through a lot of global entities with African interests. So you may, for example, have a big retail group that has entities throughout a few countries throughout Africa, or a big mining conglomerate that has mines throughout Africa. So a lot of those we have the ability to place those multi-territorial Pan-African programs because we have access to the cedants in all the different territories. So the pricing is really risk dependent, I would say.
Okay. Circling back to where we started in terms of what is happening in the macro economy all over the world, I'd just like to understand how they are shaping the trends in the insurance industry right now, from the ongoing Ukraine crisis to these heightened geopolitical tensions, inflation, which still is a big issue in most parts of the world, and specifically load shedding here in South Africa. How is it impacting and shaping trends?
Sure. I'll start on inflation, because inflation was a very topical point for us coming up to our 1 January renewals, because I think in South Africa we've always lived in an inflationary environment. I mean, you know, we've always targeted at sort of that 3 to 6%, always running towards the higher end of that 3 to 6, I would say, over the last few years.
Sure.
And even in the sort of inflationary crisis, you would say, of the last 18 months or so, we sort of topped out at about 7.8. So yes, we were higher than where we were traditionally, or where we wanted to be, but we weren't in the same space as Europe and the US, where they went from almost negative inflation to double digits inflation.
Sure.
So we had a lot of talking points around that when we were engaging with our reinsurers coming up to our renewals, was how yes, we are living in an inflationary environment, but it is on a different scale to that what has been experienced in Europe and in the US. And we certainly do not expect those sort of inflationary increases on our costings, because we don't, you know, we've always had this, and we haven't experienced it exponentially like
Sure.
they have outside of South Africa. The load shedding, also very topical. Of course, it doesn't help when you have global reinsurers visiting and suddenly we move to stage 6, or yeah, well, it's a bit
Well, you can't do much business, I imagine, in stage 6.
Well, you can. Well, yes. Luckily, we have full power backup at the office, so that doesn't impact us as much. But it becomes hard to tell a good story, perhaps,
Sure.
around the load shedding scenario. I think from a corporate perspective, I think there's definitely a move along the big corporates, heavy industry, and they have already started doing, you know, their own power generation to a degree. So I think a lot of those are pretty self-sufficient, but of course grid collapse was a big talking point coming up again through the renewal season, and even now as we move into 1 April's, which we've just been through, and coming into our 1 July renewal season, which are 2 quite big renewal months for us in corporate. Definitely a lot more pressure from the global reinsurers around grid collapse exclusions. And I think you will have seen those, or a lot of people on their private capacity will have seen those coming through in their personal lines policies, and even in the small commercial policies. We've managed to address it in perhaps a different way through public utilities extensions and changing deductibles and things like that. But there is a lot of pressure now to bring full grid collapse exclusion into corporate policies as well. So we have started implementing that.
All right. You mentioned the renewables and the backup power that your office, I suppose most offices right now have in this environment. But that is a new industry, it is a growing industry. It's probably going to be very important for a lot of time as many sectors try to back themselves up from insecure power supply. What kind of opportunities is this industry presenting for your business?
It does present opportunities for us. We already have quite a big renewables book throughout the African continent, actually. And you know, because we do write some coal risks, we do try and achieve a net carbon zero sort of effect through our book by writing renewables to balance the book. The ESG is obviously, or issues are very important to us, not only as Emerald, but as a broader group, and also to our reinsurers, which, you know, in the European environments, the ESG issues are very, very topical as well.
Okay.
So, yeah, so for us, it's definitely a growth area. We do have, as I say, quite a big renewables book, but it's definitely something that we are looking to grow over the next while.
So notwithstanding the challenges that I think we've spent quite a lot of time on, what kind of opportunities do you see for your industry in 2023, and what kind of innovations or new product offerings could your clients and the industry as a whole expect?
Sure. Within Emerald environments, we've recently reinvigorated our Lloyd's cover holder status, primarily to house our PVT business, that's the political violence terrorism business, which we housed in a facility for quite a number of years, but moving it into the cover holder facility gives our clients the access to A-rated Lloyd's paper for that PVT business, which has become quite challenging on the back of the riots and the Russia-Ukraine crisis. So that's one opportunity for us for growth, and not only for PVT, but perhaps to introduce other products into that facility over time that may require A-rated paper. The other product that we at Emerald are launching, hopefully within the next couple of months, it's in for approval at the moment, as a pandemic product. So that's a first to market in South Africa, and yeah, something a little bit different. So I can't talk about all the different nuances of it right now, but I think something a little bit different and exciting, and really aimed at the corporate clients in South Africa along the epidemics declared at a World Health Organizational basis.
Oh, sure. So essentially trying to get ahead of the next potential crisis, just given the fact that we don't know when it will be and where it will come from.
Yeah, absolutely.
All right. Carla, thanks so much for joining us in the studio, just sharing some insights on what is happening in the insurance landscape, particularly from a corporate sector perspective, and wrapping up our conversation for today. One more thank you to the Emerald SA CEO, Carla Jordan, for joining us and unpacking the topic for us. Until next time, it is goodbye.
With presence in 29 African countries, 75 innovative risk solutions, over 100 years of experience, it all adds up to being the leading specialist insurer in Africa.